to Trading 360. I'm Diane King Hall. Nicole Petalides will be back with you next week. Time now for the big three stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts, and here to take us through the trades is Alan Nuckman, Chief Market Strategist, BullseyeOption.com. All right, it's great to have both of you on. Alan, I want to start out with you, and let's just kind of overall set the stage before we get into all the trades and charts. Let's get your thoughts on the jobs report. We had 206,000 jobs added. The unemployment rate ticked up to 4.1%. What's your takeaway?
Same old. Nothing's changed. We've had perfect price performance if you're bullish. And maybe this gives the Fed a little bit more room. I mean, we know rates are coming. It's just a matter, maybe now it'll be a little bit faster than what we thought. But I look at market performance, and I'll tell you, I'll tell you how much time I spend focusing on Powell's facial expressions. 0. I let the market tell me. And the market's been right, and the market's been on a boom rally run since that October low, which targets S&P 6,000, and we're almost there.
Yeah, it's so funny when you think about kind of broad targets before, again, we get into the trades, and when you think about how analysts after analysts have had to boost their target from the start, even before the start of the year, you had all these analysts set these targets in December of last year. They quickly had to change their target on the S&P 500. All right, but before
that's not really a target. That's not really a target then. So it's simple math. We had the S&P sell off from 4,800 down to 3,600 in 2022. That's a 1,200 point drop. You put that on the old top, so a full V recovery targets 6,000. That's it. I'm not trying to predict anything. I'm just telling you what the technical target is based upon what I see on the charts.
So we should be watching levels. All right. So Alan, tell us about your first trade, FXC. It's an ETF. Tell us more about this one.
Couple things. I've been focusing on a lot of commodities plays. So FXC or FCX. FCX is Freeport-McMoRan, and I know we've talked about that, and it's had a nice little recovery, and it looks like it's giving people a second chance. So if you typed in FXC incorrectly and got FCX, you're getting the you're getting the currency, the Canadian dollar currency, which has been sideways now for many years. 4 years between 70 and 80, and 2 years between 70 and 75, setting up for a breakout. Now, if commodities benefit in this cycle and the dollar takes a downturn, which is starting to move below the 105 level, because we are going to start cutting rates, then the Canadian economy, the Canadian dollar can benefit from that. They benefit from the oil. They benefit from all the hard commodities, gold, silver, so forth. So there's an upside here with a strong support at 70. We're trading around 71, 75 right now. The way I'm looking to play it right now is with an in-the-money option. Now, the first thing I'm going to say is, these options are not highly traded. So you absolutely, let me say it again, absolutely have to use price orders. So the option I'm looking at, the 68 call, is 375 in the money. So I'm putting in a price for 4 or better, because that's, the theoretical value is about 3, very close to that 4. So even when options aren't liquid, what you do is you put in prices, and you'll see that spread tighten up, and that'll allow you to execute, because we're trading an in-the-money option that's going to act like the underlying on the upside.
All right, and Ben, take us through the chart.
Will do. Diane, Alan mentioned 3 Ps, right? He talked about perfect price performance. For me, the 3 Ps are the price probing process. And in this instance, that's been to the downside. So this trade that Alan's looking at is somewhat counter trend, and it's against the grain somewhat. Let's take a look first and foremost in an hourly candle chart, because Alan mentioned somewhat illiquid in terms of the options. The intraday chart is really non-existent for the most part. I mean, this doesn't really trade that aggressive, or that much, I should say, but it has been on a bit of a downward trajectory. We're looking at price activity since the beginning of the year. We're going back to January. It was up around 74, 74.50. Taking a look here on the way down, you can see 3 really well-defined areas where the market's paused, consolidated, and established value at lower and lower levels. Currently balancing around 71.40, and as long as we hold below 72.40, to me, it looks like the bears are still in charge here. So let's take a step back, but don't blink, because as we move from some of the price activity we've seen since the beginning of the year to now a daily candle chart, and this is going all the way back to, we're talking May of 2021, April of 2021, you're going to see a very similar pattern, right? Top left, bottom right, where areas of consolidation have been and continue to be forming at lower levels. So, I mean, the way I see it is, a long at this point. It's very counter trend. It's a bit of a guess. The thing that I would note is above 73, you could open up the doors for some strength and a retest of this upper extreme, but the bears would be looking to short that upper level because, again, the trend is to the downside, and we have been moving, value has been moving lower as you take a look here on this daily candle chart. So we've gone from an hourly to a daily. Let's take just a quick check on where we are relative to the 50, the 200, and you can see how that 200 has been a bit of a threat for the bulls for a while now. We're kind of working our way back up towards that. RSI is not really exhibiting any real strength here, so kind of teetering around. It looks like this $72 level, $71, $72 level. But yeah, to me, what I'm seeing, Diane, still a little bit of weakness here, still a product that looks like we've got bears in control.
Interesting. All right. I have no alliteration to add to this. I know you guys went for it, and honestly, I would get stumbled up. I feel like we need to do Peter Piper, pick the, you know the thing. I can't even say it. All right. Let's move on. I know our next trade is Verizon. Alan, Verizon is up. I mean, it's trailing the S&P 500 up year to date, less than 6%, year over year, less than 10%. So what's the trade here?
Well, the theme of today is finding stocks and positions, and the last trade, for example, wasn't a trade, it was a position. I was putting myself in position because we've had a series of higher lows, and that 70 is a super support level over the last decade. So let's get to Verizon. Verizon is a trading at what, $48, $41 or so. The high, just a few years ago was 62. So we're off the highs, but we've been trading in a range again between 37.5 and 42.5. Essentially for 2024. So breakout of the range targets 47.5. I'm looking at a January option, again, positioning a long-term, low-maintenance, in-the-money position. I'm looking at the 37 call, which has 7 months of time, at an 80 delta. It's trading for about $4.75. It's $4 in the money. It's like being long from 37, which is the low end of that range. And you can see how this stock has underperformed. If you, for example, look at AT&T at its highs right now, I think there's value here. And you also saw some leverage buying in this stock, which is a sign of long accumulation by smart money.
All right. And Ben, so take us through what you see in the charts for Verizon.
Sure will. In our last example, we were talking about a bit of a downtrend and how the bears are going to look to sell an upper extreme. Well, in a bull trend, the bulls are looking to buy a lower extreme, right, and participate in the direction of the trend, basically trying to find opportunistic places to do just that. Let's start off, first and foremost, with a 5-minute candle chart. We're seeing some strength here. You can see across the board over the last couple of weeks, bid activity from, we'll call it 39.20 all the way up to 42, and you can also see a couple areas where the market's paused and sort of established value at these higher and higher levels. 39.40 my eye was drawn to. You get a big breakout to the upside. You balance out around 40, and then again, similar pattern plays out. Wash, rinse, repeat, staircase type pattern reveals itself. And what I like about this is take a look. 41 is the key area, the pivot. Oftentimes when you test it, you can get a nice little bounce off of it here, which continues the bull trend and the energy associated with this move up that we've seen over the last couple weeks. Let's take a step back. Now, a bit of a bearish pattern playing out here, but I'm going to show you in a minute why I'm still giving a benefit of the doubt to the bulls. It's not because of that 5-minute candle chart. It's because of a bigger picture here. But let me just show you what's going on, how we've possibly started to establish a bit of a bottoming pattern here. And because what my eye was drawn to is a series of higher lows coming into play, right? We're continuing to try and get something going to the upside, and we're also establishing higher highs here as well. As you can see, we're taking out some key levels that were established on the way down or some upper extremes. So at the very least here, though, again, taking a step back, looking at a weekly candle chart, you're going to see why I'm giving benefit out to the bulls here. Now, in a similar situation in terms of our last example, get through the middle of this range around 47, and ultimately you open up a door for not only a retest of 62, 63, the highs from 2017, 2018 into 2019, but take a look. I mean, you got highs from way back in like 98, 99, up around 68, 69, 70. That would be the next key level for the bulls to watch for. Lastly, I want to show you where we are relative to the 50, the 200-day moving average. Getting a little bit of momentum here, right? 200 has held convincingly. They haven't even been below it since last year. And you can see how the 50, we've been kind of teetering around it. But let's see if we can build some momentum here, take out 43 ultimately. And then, yeah, this one could have some legs here, guys.
All right, looking for 43. All right, next up, let's talk about Your final trade, Alan, you've got Caesars on your radar. I know I had a big pop about a month ago. What are you paying attention to here?
First off, I don't gamble. I'm a probability guy, but we all know the house always wins. So Caesars is 70% off its 2022 top. And again, it's been trading sideways here between 35 and 45 since October. A move to the midpoint of that range of 40 should send it to a pop to the range top at 45. So the way to play, I also see leverage buying, and I also see a bullish divergence bottom in June that it made a new low, but not a new high in implied volatility. That's a sign of the sentiment shift that the sellers are running out of strength. So I'm looking at a September option, a little bit less time because there's a little bit more expense in this particular stock. I'm looking at a September option about 3 months of time. The 33 call, which is in the money, it's $4.50 in the money. It's trading for about $5.50, $5.75, and it's going to have a nice high 80 delta. And if we just get up to that 45 level, which is that top end of the range, this option gains 100%.
Okay, all right. And then, Ben, when you look at this chart for Caesars, what do you see in terms of the technicals?
Yeah, well, Alan said the house always wins. They've been losing recently, at least Caesars has. Let's take a look here at some of the short-term price activity, a little bit of decay throughout the week, and then we'll get into a bigger picture, longer-term chart, because that's where that trend becomes really clear, from 40 down to 36.60, and just kind of hanging out in this range right now, right? Where I see it, you've got a pretty well-defined upper extreme. We'll call it 39.20. You've got a lower extreme, 36.60. Everything within this range is very random, but we talk about that. That's value building, right? You can actually see that we were somewhat range bound. We break out to the downside to begin the week, and then basically we're just kind of chopping it up. This is the meeting of the minds between the bulls and the bears, right? This is the market doing its job. It's bringing together the buyers and the sellers, and here it's efficient. Let's take a step back. I want to move away from this 5-minute candle chart, taking a look here, a little bit of a longer term. Not a lot of clarity here, but kind of the mirror image of what we just talked about. Some strength, high conviction trade to the upside. We're talking about sideways consolidation that's been forming around 37. In our last example, we talked about potential to see a little bit of a trampoline or that kind of bounce off the middle of that range and potentially retest the upper extreme. That does play out here. We could stay in this range for a while and see random price activity as long as we're within it, but still on the longer term charts, as we step back, you're going to see how we are trending lower. So yeah, we could see some range bound chop type trade that could provide opportunity for the bulls and the bears while we're establishing value. But if you're really trying to participate in the longer term trend, in this one, it has been to the downside. You can see we're going all the way back to, we're talking this time last year, up around 55 we balanced, broke down. Similar pattern playing out around 43, right? Rotational, overlapping, and that's kind of what we're starting to see play out here a bit. You've got an upper extreme, again, around this 41, 42, lower extreme, we'll call it from May, around 34, and basically here we are kind of hanging out in the middle. So not a lot going on, sideways rotational type price activity, but trending lower right now, no rejection of this lower level as of yet.
All right, those are the levels to pay attention to with our 3 stocks, 3 charts, 3 trades. We finalized things with Caesars, before that Verizon, and before that the ETF FXC. Ben Lichtenstein, Alan Nuckman of bullseyeoption.com. Thank you both. Also, Alan, I love your backdrop where you are. I hope you enjoyed your 4th and enjoy your weekend. All right, coming up next, we're going to spotlight Tesla. The stock's been on a tear over the past week, but how long can the rally keep going? All things Tesla is coming up on the other side of the break. Stay with us.